All right, so doing the 2019 higher level club accounts question. All right, so you're given a list of assets and liabilities at the start of the year, 1st of January 18. Bit of information there. Then you're given a receipts and payments account for 31 December 18, so for the year 2018. So receipts and payments account is it's like a summary of a cash book. Okay, so whenever cash is received, it'll go into a cash book, and then the summary will be posted to this. Okay, so this receipts and payments account is like income and expenditure, but it's not an income and expenditure account. It's cash in and cash out. So we're going to be asked to do an income and expenditure account, and we won't necessarily be putting everything here in income and everything here in expenditure. We'll have to adjust it a bit. So the adjustments and other information here, and then what we're asked to do is prepare an accumulated fund on the 1st of January. So that's like the capital for the club. All right. So in, say, a sole trader or a company accounts question, we're given a capital number on the 1st of January, and that'll go in the financed by section of the balance sheet. For clubs, we have to work that number out ourselves. Okay. So the accumulated fund is just going to be assets on the 1st of January, take away liabilities on the 1st of January. Answer to that then is your accumulated fund, and that's going to feed into the finance by in the balance sheet. We're also asked to prepare an income and expenditure account, a balance sheet, and then just a little kind of theory question. So first up is our accumulated fund. To do that, 2 columns, headed accumulated fund, 1st of January 18, and then you're going to list the assets, you're going to list the liabilities, you're going to take them away from each other. So let's look at this. So clubhouse and course, €550,000. That's going to be an asset. Bar stock is an asset. Equipment at cost, asset. Investment interest due. So money that we are, so attributable to last year. We didn't get it last year, so it's owed to us, so that's an asset. Bar debtors, money owed to us, asset. Life membership. So life membership. So the way these clubs raise money is primarily through subscription. So like membership fees from their members. If someone has life membership, they've paid us kind of a lump sum maybe for life membership for a long number of years. So these life members are going to use the facilities of our club this year and next year and the year after, but we're not going to get any money from them. So we owe them the services or use of our club, but we're not going to get any more money. So this life membership here is actually a liability. Okay, so it's like, say, a fixed asset. A fixed asset, you use it for several years, so it doesn't go through the profit and loss. It goes on the balance sheet. Life membership will be the same. It's not for a single year, so it shouldn't go into, say, an income and expenditure account like subscriptions do, because they'd be like annual subscriptions. It's for a long number of years, so it'll sit on your balance sheet. Okay, and if you think of like the double entry for it, someone's going to pay you for that life membership, so that will be debiting the bank account. And then you need to have a corresponding credit. So credits are either income or they're liabilities, depending on whether or not the income and expenditure account or they're on the balance sheet. So this isn't for a single year, so it shouldn't go onto the income statement. It should go into the balance sheet, so it's on the credit side of the balance sheet, so it's a liability. All right. Bar creditors then, that's a liability. Wages due. So money for last year that you owe someone, so that's a liability. The Levy reserve fund is another one that just requires a little bit of thought. So as I said, members will pay you annual subscriptions for membership of your club and for use of the facilities. That won't necessarily pay for some kind of big one-off project you do. So this is a golf club, so maybe they want to add like a small driving range or something like that, or they want to add a bar, or they want to add an extension to the clubhouse. So they're not necessarily going to get enough money out of the subscriptions to pay for that. So they'll fundraise for it a few different ways, but one way is they might ask members for extra money on top of their subscriptions. Okay, and that's a levy. So the members pay extra money towards this one-off project like an extension. So again, if we think about the double entry for that, when the members pay us that levy, we would debit the bank account. So the corresponding one then is a credit, and that would go on the balance sheet as a liability. Okay, so the money is like set aside for a specific purpose. The 30,000 there, it's like it's owed to some future project that we're going to pay for. All right, so the levy isn't necessarily been received and then paid out in 1 year. It's been received, it's sitting there till we have enough money, and then we build the extension or whatever. Okay, so a levy is going to be a liability. Subscriptions received in advance. So these are received in advance. So these are 2018 subscriptions where I got the money in 2017. So for these people, I've already got their money, but for 2018, I need to give them use of my club for the year and the use of the facilities. But I'm not getting any extra money for them. They've already paid in advance. So that's a liability. Okay, so I've received the money from them already, but I owe them then the use of the facilities. So that's a liability. All right, it's not like the bar debtors where they've already bought their stuff at the bar and they owe me money. That's an asset. This one here, I've received the money, I owe them use of the facility, so that is a liability. All right. In an order level question, generally all your assets and liabilities are sitting up here. In the higher level ones, then there can be adjustments you need to make to them, or else there can be like hidden assets and liabilities in different places here and here. Okay, so let's just go through these. All fixed assets have 2 years accumulated depreciation on the 1st of January. So yeah, so this 550,000 for clubhouse and course, there's 2 years accumulated depreciation to come off that. Okay, so you can take that to be the cost, the 550,000. Equipment that cost 26,000. So it's explicitly said there that that's the cost. Okay, but there's 2 years accumulated depreciation to come off that. Okay, so these are recorded at cost, and we haven't recorded how much the accumulated depreciation coming forward is. Okay, so how much that depreciation is, I think we'll find out later. We'll be told how much we depreciate these by every year, but that's an adjustment we're going to need to make to the equipment at cost and the clubhouse at cost. So the receipts and payments account, so as I said, that's cash in, cash out. Subscriptions, catering receipts, fine. Interest on investments, so that tells me the club has 4% investments. So if you're getting interest on the investment during 2018, you must have owned the investment on the 1st of January. It's not included here. Okay, so you'll get stuff that is left off the list of assets and liabilities, and investments is going to be one of those. So we're going to need to work out how much those investments actually are. So 4%, 2,800. That's kind of we're going to use that, but we'll have to do a little bit more adjusting to it. Bar receipts, entrance fees, annual sponsorship, lottery grant, competition receipts. That's all money received during the year. That'll be income generally. Transfer from building society. So this is one they put in these club account questions a lot. So I have a building society account, and during 2018 I transferred money in from it for 10,000. So that means at the start of the year I must have had a building society account with at least 10 grand in it. Okay, they didn't list that in their list of assets. Okay, so you'll find stuff is missing from this list sometimes. So if you get a transfer from a building society, you assume that that 10 grand was the full balance that was sitting there on the 1st of January. So that's going to need to go in your accumulated fund, and it will be an asset. All right, so the transfer from a building society, 10 grand, we assume then that you had a 10 grand balance at the start of the year and that you've cleared it out, okay, for want of any other information. Maybe there is more money there, but I'm not going to get any other information in the question to tell me that. Over the payment side, so balance, yeah, so on the 1st of January, so like when I'm going down through the rest of these, I'm looking for stuff that was there on the 1st of January because that's when my accumulated fund is for. So the balance on the 1st of January of 7,300, yeah, that's there on 1 January. That should go in your accumulated fund. All right. It's on the payments or credit side, so that must be a bank overdraft. So that's going to go in the accumulated fund, and it will be a liability. Bar purchases, catering purchases, purchase of equipment in April, no. Sundry expenses, competition prizes, coaching expenses. We'll come back to all these in the income expenditure account or the balance sheet. Bank loan and 18 months interest at 3% per annum on the 31st of May. So what's included here? So there's a bank loan that I must have to include on the, so if it's sitting there in May 18 with 18 months interest, then it dates back then to what, late 16. So it must have been sitting there as a balance owed. And then also there's interest included there. So there might be interest due as well. So that's going to come from the accumulated fund as well. All right. So I'll have to do a little bit of working on that to kind of figure out how much of it is a loan sitting there on the 1st of January, how much is interest due on the 1st of January. The balance then at the end of the year, that's not going to my accumulated fund. My accumulated fund is for the 1st of January. Over here in the adjustment sense, so I'm looking for stuff on the 1st of January or maybe from 17 that's sitting there that should be on in the accumulated fund on 1 January. So end of the year. Subscriptions include new life memberships in addition to the 15. So I have the life memberships from 2017. They were sitting in my liability, so that's fine. That's just given to me so I know how much a life membership is. Subscriptions for 19, that's next year, don't need to worry about it. Levy for 18, that's this year, don't need to worry about it until later. Levy for 2017 of €50 each due from 20 members. So a levy due from 2017 is included in my subscriptions here. So if that's levy due from 17, that will be there on the 1st of January. Okay, so this is going to give me something that needs to go in the accumulated fund as well. All right, so another kind of working there for me to do. Club has decided that life membership is to be credited to income. So I'll start this year. National Lottery grant, treated as a revenue item this year, 18. So here, so equipment owned will be depreciated at the rate of 20% of cost per annum. Clubhouse and course are to be depreciated at 2% of cost. So this is the information that's going to tell me what the book value of these assets is at the start of the year. Okay, so I'm going to use this 20% and this 2% to figure out what the previous 2 years depreciation would be to get my book value coming in. Wages due on 1 January are owed to the club coach. Provide for further wages due at the end of the year. Wages due 1640 club coach. I'm not too worried who it's for. It's already recorded there as a liability on the 1st of January. Okay, so I have some stuff there that's going to go straight into the accumulated fund. I have some stuff that requires workings. All right, so I will go on and do that in a separate video.